As our week-long special China series draws to a close, we get the view of Valdis Dombrovskis, who is VP of the EU Commission. We ask why Europe, not just Switzerland, is getting concerned about Chinese companies taking over European businesses. I spoke to him at the recent summit Davos in Tianjin, where I also asked him what it will take for Switzerland to renew its stock market equivalence with the European Union. Mr. Dombrovskis, we're gathered here in Tianjin today at what is more fondly known as Summer Davos, and here you're actually going to be discussing China's pledge to open up its financial markets to foreign investors. Now I have to ask you, do you think China is sticking to its promise?
Good morning. Indeed, this is one of the topics we are going to discuss, and one of the topics I discuss with Chinese authorities when visiting also Beijing. And we welcome China's commitments and announced reforms in terms of the market opening, including in the area of financial services. And now we look forward for the implementation of those commitments and see what additional benefits it can bring for European companies, financial market participants, and also what additional benefits it brings for China itself in terms of improved access to finance. So I think this market opening can be mutually beneficial.
What is going to be your stance at this panel today?
Well, that's the basic idea, that we welcome the announcements on the market opening, and we are ready to work closely with Chinese authorities to follow it through. And I would say it also links into discussions and negotiations between EU and China on investment agreement. As you know, those negotiations are ongoing, and recently during the 20th EU-China summit in July, there was further steps made in those negotiations. So we think it's important also to build on that and reach ambitious EU-China investment agreement.
Some people have actually complained that this process of opening up has been quite drawn out, and even then there are still some more regulatory obstacles to overcome when they come here.
Well, this is something which we certainly will continue to discuss, as I was saying. So it's also important to see the practical implementation on ground, so how this market opening is really happening. But what we see from the policy announcements, especially in area of financial services, we see that it's actually quite broad range. It covers banking, it covers capital markets, it covers payment services, credit ratings, so a number of areas. So we welcome this broad-ranged commitment.
You mentioned actually practical implementation. Are you suggesting that maybe it's easier said than done, and that's why it takes a little bit more time?
Well, as you know, with this kind of reforms, implementation is at the end of the day what counts, and this you can see, so to say, from day-to-day experiences of market participants. Do they really see barriers removed? Are there some new barriers emerging, or some new obstacles emerging? So therefore we continue to monitor this situation also from practical market participants' point of view.
Now, you are actually the finance head of the EU, so we're just going to touch a little bit on that. There's a new tone that we're starting to see come out from the EU, where we see countries like Germany, they're adopting a tone where they're more cautious of Chinese takeovers of local companies. What do you think is driving these concerns?
Well, first of all, I would like to underline that EU remains open for foreign investment, including Chinese investment, and actually EU is operating one of the most open and transparent regimes globally in terms of accepting foreign investment. What we have proposed recently from European Commission side, exactly following some initiatives at the member state level, we have proposed to create what we call investment screening mechanism, which would allow EU member states to do the investment screening in some sensitive or key areas which are important for national security or other strategic grounds. And while working now on this investment screening mechanism, we do it within the framework of WTO and also within the relevant OECD guidelines. And it must be said that it's a non-discriminatory approach. So this is a general approach concerning all potential foreign investment in certain key or strategic sectors.
So you don't think it's concerning or that there's this new shift in Europe?
No, as I said, Europe certainly remains open to foreign investment, and like other jurisdictions, it may take some targeted approach when it concerns, for example, national security.
If I just look at Switzerland quickly, we have had several councillors actually raise similar concerns, saying that for very strategic companies, they want to take a closer look when Chinese companies enter and do a takeover. Do you think that this is fair if they ask for a more reciprocal nature for when they enter China and for when China comes in to European countries?
Well, on this, in any case, I think this is development similar with our investment screening mechanism, and we understand that if there are some national security considerations, some strategic consequences that countries need to be able to act on this. What's important from the EU side that it remains focused, so it cannot go overly broad. You cannot say everything is national security, and it has to be transparent. So potential investors need to know what are the rules of the game.
Actually, now at the annual meeting of the new champions, we're just going to jump a little bit to trade tensions. Now, just recently, President Donald Trump has announced new set of tariffs on this time $200 billion worth of Chinese goods. As we're seeing all these shifts, development in this saga, I would say, do you think or do you see China and Europe actually having a common interest to band together in the face of these new trade developments?
Indeed, these developments cause concern also in the EU, maybe not immediate economic concern. We still expect EU's economic growth to continue at the pace of 2.0, 2.1% this year and next. But we clearly see those escalating trade tensions as a downside risk for global economic growth and for economic growth in Europe. And what is also a concern for us is that with that kind of unilateral moves, US is undermining the international rules-based system and the role of international organizations like World Trade Organization. So what we are emphasizing, and that's where we share the point of view of China, is that you need to deal with trade disputes within the framework of WTO. Because, well, there are trade disputes, we know it exists, but the question is, do you follow the agreed rules or take some kind of unilateral action? So this is this unilateralism which also causes concern in Europe.
How far do you think the EU is willing to go to give China a lending hand?
Well, we are in this case, it's not that we are taking sides in a trade conflict, but we want to preserve this multilateral rules-based system. As regards Europe specifically, we currently have avoided further escalation. There has been a meeting between President Trump and President of European Commission, Mr. Juncker, where this further escalation was avoided, and there is a negotiating group set up between EU and US to discuss potential further trade liberalization, to address potential trade tensions. So it's good that we are sitting at the negotiating table and discussing this, but still it's a concern for us to see those escalations with other countries and first and foremost China.
And preserving this system, does that mean taking one step closer to China?
Well, in terms of preserving this system, what we are emphasizing is that if there are trade disputes, they need to be dealt in line with agreed rules in a framework of the World Trade Organization.
Mm-hmm. So how much of the EU's economic growth has actually been impacted by this ping pong of trade tensions?
Well, as I said, we currently do not see strong direct impact. Moreover, that we managed to avoid this escalation between EU and US. But we already now see this negatively affecting confidence indicators, because if there are global trade tensions, global instability, of course it affects also the EU, and those confidence indicators can potentially trigger into investment decisions, consumption decisions. So we clearly see this as a downside risk for the economy.
Just want to turn our attention to Switzerland now. Although we are not part of the EU, we still managed to have some 120 bilateral agreements with it. Don't you think this is quite a special or unique relationship that we've managed to carve out?
Well, as regards EU-Switzerland relations, of course, those are close relations, also in a framework of EFTA, and also with Switzerland being part of EU single market and being part of Schengen area.
You know, in December, the biggest talking point was obviously that the EU only decided to grant Switzerland's stock exchanges just 1 year's access to the single market. Why do you think the EU decided to take such a tough stance on Switzerland?
First, it must be noted that access to the EU single market comes with clear rules and conditions, including respect for four freedoms: free movement of goods, services, capital and labor. And of course, countries which have access have to respect those four freedoms. Therefore, currently there is EU General Affairs Council's decisions which had been taken already in 2015 and reiterated in early 2017, which links further sectoral cooperation with Switzerland with progress achieved in negotiations concerning our framework agreement, which deals with those fundamental questions.
So do you think it was tough or a fair call from them?
Well, what we need to emphasize here is that access to the EU single market requires respect for EU single market rules and freedoms.
We're in China right now, and just looking at Hong Kong, they have access. Australia, US. Do you think Switzerland should be placed in a different basket?
Well, in this case, we are discussing slightly different situations here, because none of the countries you mentioned have direct access to the EU single market as Switzerland has. So none of those countries are part of the single market. Therefore, they are not covered by four freedoms. We are rather discussing free trade or sectoral cooperation in certain areas. In case of Switzerland, we are discussing membership in a single market, not discussing, it's a fact, and we are discussing four freedoms.
Well,
and we are following up on the Council decision, as I was saying, linking further market opening or further sectoral cooperation to progress in framework agreement.
Then let's stick with Switzerland then. Does the EU want Switzerland to play more by its rulebook?
Well, in this case, we need to reach agreement on the framework agreement,
Yes.
on the framework agreement, and we think we are making progress, and hopefully we can conclude those negotiations in nearest time.
Can you be more specific about progress, as in give us a time frame and how well the progress is progressing?
Well, actually, when we took also this equivalence decision, the timeline we choose was consistent with a timeline announced by the Swiss government itself, which expected to conclude those negotiations during this year.
Some people actually called that point in December a low point of the relationship. Do you see it that way, or do you feel like the relationship is still quite stable between Switzerland and Brussels?
Well, we have very close and strong relationship, and it continues to be so. As regards our decisions in December, as I was saying, they were following EU General Affairs Council's decisions already taken in 2015 and reiterated, as I said, in early 2017. So the signal of link between respect of four freedoms within the single market and further sectoral cooperation was very clear already for several years.
So just looking ahead, what specifically does Switzerland need to do to first of all get renewal next year, and even further to get it for an unlimited period?
Well, I would say we need to reach agreement on the framework agreements. That's the main point that was also very clearly communicated.
Isn't that
to Swiss,
easier said than done? Just reach an agreement. There's so many steps between that.
Well, that's why also when we were choosing the timeline was chosen in the way which was consistent with the announcements of Swiss government itself. So we're not imposing some kind of unrealistic deadlines. We are imposing deadlines in line with, so to say, announcements or commitments taken by Swiss government itself.
Another important player that could soon be out of the EU is the UK. Do you think they should be placed in the same basket as Switzerland?
Well, once again, those are still different situations, because UK is currently still member of the EU. It has taken decision to leave the EU, and as we know, it has also taken decision to leave the EU single market. So from that point of view, this relation may be different, because Switzerland will remain part of EU single market.
Even though it might be like comparing oranges and apples, I think nonetheless the UK is still looking towards Switzerland and its developments as kind of an inspiration, or maybe to draw a few lessons from it.
Well, of course, I cannot comment on behalf of UK government how they are modeling their future cooperation with the EU. That's of course for them primarily to decide. But we heard those discussions that they were looking at this European Economic Area model, EFTA model, but at the end of the day their decision was to leave the EU single market, exactly for the reasons that they didn't wanted to respect the conditions associated with the single market. They didn't want to respect four freedoms, jurisdiction of European Court of Justice, and also financial contribution to the EU budget, which are all conditions linked with a single market, and that was a reason why UK decided to leave the single market. So we'll have to build our relation on a new ground.
I only say that about the UK looking towards Switzerland just because there's no other person or model they can really take inspiration from.
Well, let's see. In any case, also in the Brexit negotiations, we are now in final stages of negotiating so-called withdrawal agreement, and once this is done, we negotiate our future relations, including potential future trade relations.
Is it looking good, the future relations?
Well, I would
Is everyone
say,
going to be happy?
First of all, it's worth noting that in case of Brexit, we are dealing here with, so to say, dismantling decades of close economic integration. So there is going to be economic disruption, something we did the assessment already immediately after the Brexit referendum. We see quite marked slowdown of UK economy. According to our summer economic forecast, actually UK together with Italy are now slowest growing EU economies. So clearly there are economic consequences which follow this decision in the referendum.
And much like implementation takes time, dismantling is also going to be a lengthy process.
Well, yeah, this is, I would say, a very unfortunate process, but, well, we are currently dealing with this because, well, we have to respect the outcome of the referendum and following decisions of UK government. But, of course, we also need to be mindful of economic consequences.
I want to switch our attention now to something that you actually have been quite vocal about. You recently said at a meeting in Vienna that crypto assets are here to stay. What makes you so confident?
Well, as regards crypto assets, also initial coin offerings, well, those are relatively new developments. And as a European Union, we now need to think how we react on this. And of course, you can think it's a passing phenomenon, it comes and goes. But in our case, what we are doing now, we are doing a regulatory mapping. So we're assessing those new instruments and looking whether existing EU financial regulation is sufficient to address those new financial instruments, or do we need to set up a new legislation for crypto assets, for initial coin offerings. And we hope to finalize this work on regulatory mapping by the end of the year, and that's where we will take decisions whether to regulate those markets, in which way to regulate them. In a case, as a regulator, as a European Commission, we need to take those developments seriously and see what kind of regulations they potentially require.
So by the end of the year, can we see new legislation potentially?
Well, by the end of the year, we'll finalize the regulatory mapping, the assessment of the nature of new instruments and what regulations they may potentially require, and we will take decisions and following this regulatory mapping. So no decisions are taken yet. We first need to gather this evidence before deciding. But there are some aspects which we already need to deal with. For example, at the request of European Commission, European supervisory authorities early this year renewed their warnings about crypto assets, basically outlining the highly speculative nature and risks for investors, including the risk of losing their investment. We also already have introduced some rules as regards anti-money laundering concerning crypto assets or cryptocurrency exchanges and concerning custodian wallet providers. So there are some aspects which are regulated already, and now we do this broader regulatory mapping.
And since you will be involved with that, do you also have any personal experience in using cryptocurrencies, for example?
Well, it must be said I have not been using them myself, but in any case I'm paying attention to those developments from the regulator's point of view.
Maybe if they decide at the end of the year it is too risky, you'll be stepping away. You won't be trying it out.
Well, by the end of the year we'll finish the regulatory mapping, and I think then we'll have a clearer picture which direction we want to go as a EU. Of course, it's worth noting that EU is maybe not the major market for crypto assets. We have less than 5% of the global crypto assets market, so we do not see kind of systemic risks to the financial stability in Europe concerning those crypto assets. But in any case, there are some elements which we need to look at. So what I'm saying is that indeed we need to take this development seriously and see how to find the right balance between promoting new developments, promoting fintech, and protecting consumers and investors.
You say that EU might not be a big player, but coming from Switzerland or living in Switzerland, I would say that the tiny country of just 8 million is also trying to position itself as a crypto hub. So do you think that the euro could be taking a few lessons from that?
Well, we are very open to look at developments of fintech in more general. Actually, it was one of the topics when I was discussing earlier with Chinese government representatives, when I was discussing with Hong Kong representatives, because we see actually that there is a very strong development of fintechs. There are many innovative fintechs. There is very strong developments in areas of payments, for example, and certainly those are interesting developments also for Europe. So we need to see how we can promote fintech development in Europe, and especially how we can promote that companies are actually scaling up in Europe.
Mr. Dombrovskis, thank you very much.
Thank you.